want to do an update on the gold and silver, basically, but throw a couple other things in there I don't think people are too much aware of. But just, we know that the physical buying is heavy, even though the price is going down. But just give you a couple more facts, because I know you'll hear from the usual crowd about, the conspiracy of the price and all this type of stuff. But just to give a couple facts, one of the largest European banks, which was actually the largest Dutch bank last month, it was ABN AMRO. They defaulted on their gold contracts basically by saying, we can't provide you with physical gold, we got to give you paper, we don't have enough gold. Also, I know like the COMEX, they have less physical gold in their safes now than they had in like the last 12 years. They've had more gold exit in the first quarter of 2013 than the whole 12 years of the gold bull. It's basically that bad. So, and basically this is driven by fear. People are scared. People in the know are scared, right now. The other thing is China is buying up gold left and right too. And their imports have set a brand new all-time high as of March 2013, and it's expected to break that record in April 2013. That was according to Zero Hedge, not a bad source usually, but that's something else. Now I want to point something else out. We're seeing the stock markets going up. Now a lot of people look at the S&P versus the Dow. I think it's a better judge of what's going on. But I just want to point out something about the S&P 500. A lot of people think it's all U.S. stocks. It's not, actually. Actually, 66% of the S&P 500 is U.S. stocks. And of the remaining 34%, you have 1% Canada, 1% South America, and of the 32% that's left, it's Eastern Europe, Western Europe, Japan, and Asia. So, in effect, the S&P 500, when it goes up, it's kind of like the global markets going up with a heavy emphasis on the U.S. market. You might want to look at it that way. But some of the best sectors that are doing the best is actually in banking, finance, and real estate. And if this doesn't give you a good idea as to why you suspect highly that has to do with policy of the Federal Reserve. Basically, the Federal Reserve is buying up troubled assets from banks, and if there's a problem where they're upside down on the loans, they buy up the troubled assets, and they hold them on their balance sheets. So it's propping up the real estate market. The real estate's actually one of the areas that's the hot sector of the economy. Probably more dangerous now because it's been going up. Banking and finance, another area. Actually, tech is going up pretty good. Not all tech is in danger though, but that's another area. Now, the parts of the economy, in the parts of the stock market that are actually not doing good, is in the energy sector and the mining sector and the commodities, obviously, right? Now, I want to point something out interesting because Goldman Sachs, a lot of people don't trust Goldman Sachs. I don't trust Goldman Sachs all the way, but what Goldman Sachs is actually saying, like some of the best picks going forward is pretty much almost the same as we were saying in late 2012, is in the energy sector. I find that interesting because, they're saying those are some of the most underbought stocks. Like, it's not all in the energy sector, but if you look at, the 30 or 40 stocks that they're recommending that are the most underbought, they're pretty much a lot of them, or maybe more than half of them, are in the energy sector, and even of the remaining ones, they're in the mining sector. So, like Goldman Sachs doesn't always give you a bunch of bullshit. I'll put it that way. I mean, it's like, you got to realize that, they're in the business of making money for the clients too. I mean, it's like, they could be ripping you off, but they might not be ripping you off. How's that, But I'll say this, though, where I find that extremely interesting is this for this reason. There's a major correlation between the price of gold and the price of oil or the energy sector. In other words, if the energy sector is depressed and it's a buy, and they're saying these are the most underbought stocks, yet on the other hand, they're saying gold is going to go down, it's almost like they're disagreeing with themselves because there is a strong correlation between energy prices and gold. And, actually energy prices and the U.S. dollar strength. Actually our U.S. dollar is no longer backed by gold, but basically it's backed by energy. So when they're saying energy stocks are depressed, it's almost like they're saying gold is depressed. And they're also stating the fiat dollar is too high. You know what I'm saying? Because basically, the dollar, what backs the dollar is the energy. And if the energy price was higher, that means the value of the dollar is lower. Right? But just, using a little simple 101 calculation there, pretty much tells you what the real deal is. Because basically they're telling you the truth, but they're not telling you the whole truth. That's really what it is. They're not telling you the whole truth. Now, I want to say something too. Like, I know a lot of people, like, I think Silver Mania, I'll mention his name. He must have subscribed to me and unsubscribed from me like 50 times, because I know it's like Silver's been an emotional roller coaster, and that's pretty much how everybody feels about Silver. Silver's the devil's metal for real. If there was a war with Iran already, yeah, I know silver would have went up a lot, gold and oil and that crap. And I know people know I said this a million times, but I don't know when it's going to happen. Actually, Dr. Kent Moores, who was like a big swizzly, he is intelligent. He's a doctor, PhD. He was one that was pointing out that he expected a war with Iran, a strike from Israel last year, and by late spring or early summer at the very latest in 2012. And it never happened. But if you start digging up into the behind the scenes what happened, it was very close. Netanyahu wanted to do it, but the Mossad pulled him back. But what I think is going to happen is if there's something might happen earlier, I don't know. I mean, it's anybody's guess. But if it doesn't happen, I'm thinking by late summer, we're going to start seeing the metals start going up again. There's too much pressure going on behind the scenes. And, don't go thinking... I want to dispel this freaking bullshit that's out there. When I tell you, like, it costs to produce silver is this much, or the cost to produce silver is that much, or whatever, and, that's really what it should be, because it only costs that much. You know how many ways there's a freaking art to lie through money with accounting? You know how many ways there are? Oh, a million. Let me put this out to you. I mean, if the cost is that low, then the silver, and I know silver's a byproduct of copper. It's mined with copper, it's mined with gold. There's some silver mines out there that are mainly silver, but mainly it's other. But the miners in general are making very little money. They're losing money. A lot of them are losing money like crazy. So the price of, actually when we're looking at silver, the side price of all the metals and all the commodities are down. And Goldman Sachs itself is telling you the energy stocks, like they picked out maybe 30 or 40 stocks, but probably I think about half of them, or maybe a little more than half, are energy sector. They're undervalued. But the other thing is, it's not just a link between energy and gold, and it's actually an inverse link between gold and the dollar, right? But it's also I was going to say, it's more than that, because when the price of energy, in other words, if the mining stocks or the energy sector is depressed, that means the price of oil is depressed. The price of oil goes up, the cost of mining goes way to hell up. It's a very, very energy intensive operation. You remember during the Clinton administration, I think gasoline was diesel was under $2 a gallon. I know you could say all this stuff, they use biodiesel. Believe me, they try to do everything they possibly can to cut down cost. They're not stupid. They're experts in the area. That's the only reason, it's survival of the fittest. And actually the mines that have been around for 20, 30 years, you got a lot of experts in there. It actually gets very complex. There's all these people have all these new ideas how they can extract things a lot cheaper and get a greater percentage of the actual precious metals out of the ore, and there's all kinds of crap out there. It can go on for hours with that shit. And but I can tell you this: no schmuck in Wall Street, it would behind a desk with a pencil or some shit, I write on paper all day. You know, I think they're God. They're stupid as all hell, in my opinion. But they can't. They have no better idea as how to extract the metal cheaper. But they're telling the mines the price should be lower, but yet we need the product. Yeah, something's wrong with this equation. It's not going to continue. But in actuality, Goldman Sachs is actually telling you the price of metals is too low. Because they're saying the energy sector, there's many of the stocks are saying that are most underbought are in the energy sector. And believe me, there's a major, major correlation between the price of energy, oil, and gold. And when energy goes up, that means it's going to be that much more money to extract metals from the earth. So, you know, there could be an explosion in the price pretty soon. I don't know exactly. I wish I knew for a fact. But I don't know for a fact. But this is like something's going to break because basically commodities are things people need. It's one thing when it's a bubble and you could say, oh, it only costs $10 to get silver from the earth. Well, I'm going to tell you, it costs a hell of a lot more than that because they're losing money. They're losing money. Whether they're extracting copper, gold, if they're extracting nickel, aluminum, or whatever they're doing, they're losing money. They're losing money. I know there's a lot of ways you can lie with spreadsheets and say, oh yeah, this is what it really cost. Yeah, it's almost like saying I'm looking at the direct construction cost of a house. You know, it was $49,000, and we're not including the land, the engineering cost, the permitting cost, you know, the impact fees or anything else, the maintenance fees, the interest on the loan from the bank. We're not including any of that stuff. Just the cost to actually build it, you know. That's kind of like what they're trying to, maybe that's how they come up with some of these lowball numbers on the price of silver because, you know, when that mine got set up, they had to do wildlife studies, road impact studies, they had to deal with attorneys' fees, litigation, you know, long drawn out geological studies, you know, they had to pay interest on loans, all kinds of stuff. That's all figured in there. That ain't free, you know. That ain't free. You know, it takes a lot more to open up a lemonade stand than you think. So that's pretty much what it comes down to. So the mines are losing money. The price is too low. And I just want to bring this out. Goldman Sachs, a lot of their top picks is actually in the energy sector, which pretty much tells you gold is going up because there is a strong link between oil, energy, whatever you want to say, oil/energy, and gold. And if oil and energy goes up, mining costs go up. And if the miners are losing money now, they're going to lose even more money. So how's this going to work out, right? So I think the dam's going to be breaking here at one point in time. I don't know. It's taken a long time, and I don't like it either, to tell you the truth. But I smell a rat, you know, when they're telling you that silver's going to stay down to $10, $15. I don't know. Those are fear mongers, and I can tell you this too. You know, I see extremes on each side, and I have to see. I'm gonna have to point this out at the end here with the religion thing because, you know, Jesus himself and a lot of the major saints and stuff, they were not fearful. But I've noticed a lot of times it seems like extremely fearful people go into religion a lot. So you get extreme predictions in markets, like one way or the other. Either, you know, we're going to see like the banksters all fall apart. You know, it's bullshit. I don't know about that crap. And silver's going to go to like $1,000 an ounce. Or we're going to see predictions like, oh no, it's going to $10 an ounce. It's not. Silver's not going to lose half its value when they're already losing money on this product already. It's not going to lose half its value. So avoid these extreme predictions left and right because I don't know. I think they're played to the fearful all the way. It's not going to go that crazy one way or the other. But Goldman Sachs actually is kind of hinting that you're going to see a major turnaround because they're predicting the energy sector is one. That's like the main area they're saying is highly depressed on stock prices. And they're also saying some of the mining sector, but it's mainly the energy sector. But the energy sector and the mining sector are kind of related because mining is a highly energy intensive operation. And the energy oil sector there is a very high correlation between that and gold. So in effect, they're telling you the price of gold is suppressed. They're not saying that, but they are saying that. So read between the lines. And stay chill, because I'll tell you one thing: if there actually is a financial collapse, gold and silver and fiat, none of that stuff is going to save you. What's actually going to save you is your own resourcefulness. Your own resourcefulness. In other words, if you got food supplies and you got energy, you can do all that kind of stuff, and you can go like that. If there's a banking financial problem or something like that, silver and gold and fiat paper ain't going to help you. It's actually having your physical prepping supplies with you. If that happens, I'm leaning towards it's not going to happen like that. I think what's going to happen with the dollar is it's going to lose a lot of its clout in the world, which it's been losing. It's not going to go away completely. It's going to be around for a long period of time. But it's no longer going to be the world reserve currency. It's going to be the dollar is going to be part of the world reserve, and there's probably going to be a half a dozen other currencies out there part of the world reserve currency. And they might include a little bit of gold in that too. That's what I think is going to happen. But I say gold and silver are going to go way up because they're not making money on this stuff. That means it's too low, priced. In other words, the mines aren't making money. I don't care how they skew the numbers on spreadsheets and they tell you it only costs you $10 to cut mine silver. Miners are losing money. Miners are losing money. And pretty much Goldman Sachs actually even has some bets on miners as they're very depressed too. Mainly they're predicting the energy sector is the most depressed. So, but that tells me energy, oil/energy, high correlation to gold. If that area is depressed, so is the price of gold. Pretty much Goldman and Sachs is telling you that.